if I told you there's a way to lower your monthly mortgage payment without refinancing, without paying closing costs, and without changing your interest rate? It's called a mortgage recast, and today I'm explaining exactly how it works and why it might be perfect for you. Now, let me tell you about a client of mine. We'll call him Mike. Mike found his dream home for $800,000 in a hot market where contingent offers just weren't cutting it. He was selling his current home and expected about $215,000 in net proceeds, but sellers weren't accepting contingent offers. When Mike first called me about his situation, I immediately suggested a strategy. We'd get him into the new home with a minimal down payment, then use the proceeds from his home sale to recast the loan afterward. Now, Mike could only scrape together a 5% down payment, $40,000 in this case. That meant taking out a $760,000 mortgage with a slightly higher rate and mortgage insurance, stretching his budget to the absolute limit. His principal and interest payment was a whopping $4,080 per month, which he could barely qualify for, while still owning his other home. When his original house finally sold 5 months later and he got his $215,000, we implemented the second part of our plan. At that point, his loan balance was $754,464. He made a $200,000 principal reduction payment towards his new loan, paid a $300 recast fee, and his payment dropped from $4,080 to $2,998 per month, saving him $1,082 every month for the remaining 354 months of his loan. Plus, due to the recast, he was able to eliminate his mortgage insurance because his loan to value dropped below 80%. That's the power of a recast that most lenders don't tell borrowers about. In this video, I'll cover what exactly a mortgage recast is and why lenders don't talk about it. The 3 most common situations where recasting makes perfect sense. Step-by-step instructions on how to recast your mortgage. Why this can save you thousands compared to refinancing. As a mortgage broker, I want to share strategies that actually benefit you, not just the lenders. This is one of those industry secrets that can make a huge difference to your financial situation. Section 1. What is a mortgage recast? Let's start with the basics. A mortgage recast is when you make a big lump sum payment towards your principal balance, and then the lender recalculates your monthly payment based on this new lower balance. Here's the key stuff you need to know. You typically need to pay at least $5,000 to $10,000 towards your principal balance. Your loan term stays exactly the same. Your interest rate doesn't change at all. Your monthly payment goes down, as we saw with Mike's situation. Recasting can dramatically lower your monthly payment. The bigger your lump sum payment, the more your monthly payment will drop. Why don't lenders talk about this? Simple. There's not much money in it for them. They typically charge a small fee of $250 to $500 to process a recast. And that's it. Compare that to thousands in fees they make on refinances. Let me be super clear about this difference. With recasting, you pay a lump sum and your monthly payments get smaller, but your loan still ends on the original date. You're redistributing your principal and interest over the remaining months. With prepaying, you make extra payments. Your required monthly payment stays the same, but your loan ends earlier than scheduled. Section 2, top 3 scenarios when recasting makes sense. Here are 3 common situations where a recast could be your best move. Scenario 1, receiving a large sum. Maybe you got a big work bonus, a sizable tax refund, an investment that paid out. If you want to lower your monthly obligation but not tie up all that cash, a recast is perfect. You make one big payment, but then have more breathing room in your budget every month after. Scenario 2, buying before selling. This is a big one I see all the time. Here's how it works. You buy a new home before selling your current one. You make a smaller down payment since your money is tied up in your old house. After your old house sells, you use some of that money to pay down the new mortgage. Then you recast to lower your monthly payment. Without recasting, you'd be stuck with higher payments from that low down payment even after your old house sells. Scenario 3, inheritance or windfall. If you receive unexpected money like an inheritance, a recast lets you increase your home equity right away, reduce your monthly expenses going forward, keeping your existing interest rate, crucial if rates have gone up. When to recast versus refinancing. Let me break down exactly when you should recast instead of refinance. Choose recasting when interest rates are higher than your current rate. You have a large lump sum to put towards your mortgage. You want to lower monthly payments without extending your loan term. You want to avoid closing costs and fees. Your credit score has declined since getting your initial mortgage. Choose refinancing when interest rates are lower than your current rate. You want to change your loan term, shorten or lengthen it. You want to switch loan types, like an ARM or going into a fixed rate. You want to cash out some of your equity. And you need to remove someone from your loan. In Section 3, how to recast your mortgage. Ready to recast? Here's exactly what to do. Step 1, contact your loan servicer. Find your mortgage statement. Yep, that's the bill you get each month. Call the customer service number on that statement. Ask specifically about a mortgage recast or a loan re-amortization. Confirm the minimum amount required, usually about $5,000 to $10,000, but that can vary. Also, make sure your loan type is eligible. Most conventional loans are, but FHA and VA loans usually are not. Step 2, submit your request. Fill out the recast agreement form they send you. Schedule your lump sum payment. Pay the processing fee. Again, that's usually between $250 to $500. Now, I have an important warning. Do not just make a large payment and assume it will automatically trigger a recast. When a lender receives more money than your required payment without specific instructions, they won't apply it anywhere. That extra money will just sit in a suspense account until they're told what to do with it by you. You must complete the official recast paperwork first. Then, follow your servicer's exact payment instructions to ensure your money is properly applied toward the recast. Step 3, watch your payment drop. Changes typically take effect within 1 to 2 payment cycles. Your loan term remains unchanged. Your amortization schedule gets recalculated. Your credit score isn't affected at all. Key takeaways. Here's why recasting can be such a smart move. It keeps your original loan terms intact. No credit check is needed. No income verification is required. Your equity increases immediately. Perfect way to use large lump sums. The processing fee is way cheaper than refinancing costs. Let me show you the actual numbers comparing refinancing versus recasting. Now, refinancing a $500,000 mortgage typically costs between $5,000 and $10,000 in closing costs. Recasting typically costs $250 to $500 in total. That's potentially $4,750 to $9,500 in savings just by choosing to recast. Now, remember Mike's story from the beginning? 6 months after recasting, he called to thank me. That $1,082 monthly savings made a huge difference in his budget. Over the remaining 29 and a half years on his mortgage, that's $382,859 he'll save, not even counting the mortgage insurance savings. All because we planned this recast strategy from the start, unlike what many other lenders would suggest. So now I'm asking you, could a mortgage recast be the right move for your situation? Drop a comment below with your scenario and I'll help you decide if it's right for you. If you're in Oregon, Washington, or Idaho and trying to decide between recasting and refinancing, I offer free 15-minute consultations to help you make the best financial decision. The link is in my bio. Don't forget to hit like and subscribe for more mortgage tips that the banks don't want you to know about.